Welcome to Boardroom Talk, the podcast where we cut through the noise and decipher the corporate jargon. In this episode, we're going to look at the real drivers exposed by numbers released overnight by two businesses that our tribe co-owns through the BizNews Ricardo US portfolio. And we'll take a close look at fresh figures from South Africa's oil from coal champion Sasol. I'm Alec Hogg. It's my pleasure to have you with me. Well, Wall Street's reporting season, that's of the quarterly results, began this week. And we're kicking off today's episode of the Boardroom Talk by looking at the first quarter update from Elon Musk's Tesla. That's a company that is aggressively shedding its identity as a maker of electric cars and becoming a global artificial intelligence juggernaut. After we unpack Tesla's leap into autonomous reality, we'll bring things back home here to South Africa and have a look at the 9-month operational update from our homegrown energy and chemicals champion Sasol, a business that's battling severe macroeconomic crosswinds but has been benefiting greatly by a surge in the oil price. And then finally in the episode, we're going to wrap up with a company that flies under the radar for many retail investors, but consistently delivers for the smart money. Teledyne Technologies. Hulle weet nie wat ons weet nie. You could almost apply it there. This is a company that I became aware of back in 2013. It was after a visit to the Berkshire Hathaway AGM, where a book was recommended by Warren and Charlie, written by a man called William Thorndike, who wrote about 8 unconventional chief executives in that book, The Outsiders, and one of them was Henry Singleton, the man who started Teledyne. To give you an understanding of what a phenomenon Henry Singleton was, the preface has the title Singletonville. And then you go into the chapter on Henry Singleton, and Thorndike quotes Warren Buffett from 1980, where he says, Henry Singleton has the best operating and capital deployment record in American business. If one took the top 100 business school graduates and made a composite of their triumphs, their record would not be as good as Singleton. So what he's saying is take the top 100, put them together, and show them to best effect. They're not going to get close to this man. Why was he so good, and what stands apart, even today, with Teledyne? Thorndike says, but what really set Singleton apart and eventually made him a Garbo-like legend was his returns, which dwarfed both the market and his conglomerate peers. Singleton managed to grow values at an extraordinary rate across almost 30 years of wildly varying macroeconomic conditions, starting in the go-go stock markets of the 1960s and ending in the deep bear markets of the early 1990s. He did this by continually adapting to changing market conditions and by maintaining a dogged focus on capital allocation. That capital allocation was by delegating authority down to the divisions, just like what Warren Buffett repeated at Berkshire Hathaway. So that's Teledyne, and that's the stock we have in our portfolio. So let's start, though, on this wrap-up of the updates from the quarterlies in Austin, Texas, with the freshest numbers from Tesla. I must tell you that if you're looking at the company merely as a car manufacturer, then your framing is entirely out of date. We've been told for a long time now that Tesla is a lot more than that, and indeed that if you read Kathy Wood's reports or watch her videos, she's saying that Elon Musk is more about autonomous cars and indeed about robots than he is about manufacturing cars or vehicles. And that's why she remains such a huge fan. And indeed, in the ARK funds, Tesla is the biggest stock that is held there. Not everybody buys it, though. But let's quickly touch on the headline financial numbers for those 3 months. They remained very robust. Total revenues for the quarter came in at just under $22.5 billion US dollars. That's up 16% year on year. Now, I want to stop there for a moment for context. That is 1.5 trillion rand. So here you have this guy who went to Bryanston High, got bullied, then went off and finished his schooling at Pretoria Boys High, left South Africa, made his fortune internationally, starting with nothing, pretty much nothing. And he has built a company whose revenues are 1.5 trillion rand. By comparison, Sasol, which we're going to talk about in more detail later, sells petrol and chemicals, so much lower, more commoditized products. Elon, remember, sells electric cars, or those Tesla cars. Sasol's turnover is about a third of what Elon Musk's Tesla's turnover is. And then maybe for more context, have a look at our retailing giant ShopRite. And you take everything that ShopRite sells in a year, Tesla's turnover is 6 times that. And that's only one of Elon Musk's numerous creations. SpaceX is even bigger. Yet the chattering classes on his X platform, he now owns it, he bought Twitter, keep going on and passing judgment on Elon Musk. Oh, he's an idiot, or he doesn't know this and he doesn't know that. It just beggars belief sometimes, the absolute ignorance that we see amongst the public. If this guy were to be given his true accolades, it would be very difficult for anyone to start throwing those brickbats around. But I guess a lot of those doing the criticism are empty vessels. I don't even stop and think. It beggars belief in my mind. But anyway, here we have a genius of our age, and even better, he comes from South Africa. Let's move on then to the Tesla numbers. They generated $1.5 billion in free cash flow. Operating income was just under $1 billion. This is for the quarter. And it delivered 358,000 vehicles. So there were more Tesla vehicles produced by Elon's company. And remember, these are highly sophisticated electric cars than were produced were sold in South Africa in the past year. And those Teslas are up 6% on the prior year. But that's just the starting point. To truly understand the trajectory of this business, we need to listen to Elon himself. Here's a short clip from the conference call to investors that Elon Musk had last night. The first quarter conference call where he outlined exactly where the capital is flowing right now. And back to that Outsiders book, it's all about capital allocation. Here's Elon.
I think we've got a very exciting year ahead of us with 2026. We're going to be substantially increasing our investments in the future. So you should expect to see a very significant increase in capital expenditures, but I think well justified for a substantially increased future revenue stream. And obviously Tesla's not alone in this. I think you've seen certainly the major technology companies substantially increasing their capital investments, and we're going to be doing the same. I think it's going to pay off in a very big way. So we're investing in and improving our core technologies, battery powertrain, AI software, AI training, chip design, laying the groundwork for significantly increased manufacturing production. We are also strengthening our supply chain across the board, batteries, energy, AI silicon, everything, and laying the groundwork for what we expect to be a significant increase in vehicle production in the future. And of course, actually releasing Optimus, but increasing our internal production for testing, and then probably being able to have Optimus be useful outside of Tesla sometime next year. As you've heard me say a few times, I think Optimus will be not just Tesla's biggest product ever, but probably the biggest product ever. And I remain convinced of that conclusion.
Okay, I'm going to talk about Optimus in a moment, but I've got to just dwell on South Africa. In amongst all of this, and when you listen to what's on this man's plate, he is still tied to his homeland, to his original homeland, and saying, come on, guys, You can be doing so much better. Just get rid of this BEE nonsense. It doesn't make sense to have race-based laws. Stop this barrier that you put in the way, government, and start looking to the future. And part of that, Elon is saying, I want to bring Starlink to South Africa so that you can start plugging in to internet connectivity at much lower prices and much faster than you're getting from the incumbents. Starlink is here. It's working in Africa. Bring it to South Africa. I'm not going to give 30% to the pals of the ANC government. I refuse to do that. And why should he? I'm not going to bribe anybody. But what I will do is I'll put $500 million into rural schools through giving them connectivity. My goodness, what is stopping those who are arguing against this obvious dividend for South Africa by one of its own who's become the greatest entrepreneur of our age? All that's stopping them is their blinkered greed. I feel strongly about this. No kidding. Anyway, on to Tesla. It's spending billions in laying the groundwork for a massive transition from a hardware-centric auto manufacturer into an artificial intelligence robotics powerhouse. Interesting what he was saying there about Optimus. What is Optimus? If you've never heard of it before, don't worry, most South Africans haven't. But this is Elon's next big thing. And he says he thinks it's going to be the biggest product in the whole world, certainly the biggest product for Tesla. Now, if you're thinking that Tesla is producing 350,000 electric cars a quarter every 3 months, more than 1 million in a year, how many robots? Because that's what it is. It's personal robots. Optimus is going to start rolling out big robots, big volumes of robots in this quarter before the end of June. And then it'll start getting robots available for the rest of the world. So in the same way as electric cars have transformed so much of the vehicle environment, Optimus or robots, personal robots who do various things for you around the house and in factories and etc., are going to transform so much of what we know or now believe to be the situation in our own lives. And this is not just talk. The full self-driving technology is something that Elon has been banging on about for years, and people have looked at it very skeptically. It's a cornerstone of Tesla's high-margin software ambitions. This month, 2026, the company achieved a massive regulatory breakthrough when it got approval to deploy supervised full self-driving technology in the Netherlands. That's critical because it essentially clears the path for potential regulatory approval in other EU countries. So he's breaking into the European Union. But the real quantum leap, the moment that science fiction became science fact, commercial reality, happened in Tesla's home market. Also this month, Tesla has officially launched unsupervised robotaxis in Dallas and Houston, two highly sophisticated, large cities. Now, you've got to really think about that. Unsupervised. That means you call for a taxi, it arrives, no human driver, nobody behind the wheel. It's all technology driven. And the company reported that its cumulative paid robotaxi miles nearly doubled quarter on quarter. It's laying the groundwork to expand this service to other US metros. Preparations are underway now for places like Phoenix, Miami, and Las Vegas. And it is the beginning of an autonomous future, the beginning of not having to drive your car, or indeed not even having to own a car. Because when you need a vehicle, even to take you 500 meters to your local shops if you've got a sore leg, well, that's what you're going to be able to do. Call it up, vehicle, probably better, more luxurious than the one you could afford to own. will arrive outside your home. In you pop, it'll take you to where you need to go and drop you off. That's the future. Science fiction becoming science fact. And it's happening for Tesla robotaxis in Dallas and Houston. Tesla, to power this, though, requires computing power on a scale almost difficult to comprehend. It's building, as a result, an AI training infrastructure that rivals the biggest tech monopolies on Earth. The Cortex-2 AI training compute cluster at Gigafactory, Texas. It's now online and actively running training workloads. So it's training the AI. But Elon and co aren't stopping there. In a bid to secure their semiconductor supply chain against global shocks, think TSMC, which is in Taiwan, producing 40% of the semiconductors in the world. It's partnering with SpaceX, remember, those guys who own Starlink, also owned by Elon Musk, to build what it aims to be the largest chip fabrication plant ever built, vertically integrating logic, memory, and advanced packaging. Also this month, Tesla completed the final chip design for its next generation, what it calls an AI5 inference processor. Watch out, NVIDIA fans. Well, here's the crux of it all. What exactly is Tesla training with all this massive computing power? Well, it isn't just cars. The preparation for the first large-scale Optimus humanoid is what they call it, humanoid robot factory. That starts shortly. And Elon says before the end of June. In other words, in the current quarter. And that'll be at Tesla's Texas facility. It isn't an R&D project anymore. It's now industrial scale. The first generation Optimus line is being designed to produce 1 million robots a year. It'll physically replace the old Model S and Model X Tesla car production lines in Fremont, California. So where Tesla started and moved 4.5 years ago from California because the legislative structures in California are not appealing, so off they went to Texas. That is going to be converted from cars to producing robots. And Elon's team is also preparing the Gigafactory Texas for a second generation line designed for a staggering long-term annual production capacity of 10 million robots. The biggest product ever, says Mr. Musk. He's a phenomenon of our time. And the stuff that's happening at Tesla, at SpaceX, within the Elon Musk empire is just mind-blowing. So when you look at Tesla's quarterly results, you can't just look at that 6% increase in car deliveries. You have to look at the fact that it's on schedule for volume production of a purpose-built Cybercab and the Tesla Semi for this year. You have to look at autonomous vehicles, and you also have to look at the AI infrastructure. Don't forget that this is the guy, Elon Musk, who actually started ChatGPT. So he's been in the AI area for a lot longer than anyone even considers. Tesla is actively building the brain and the body of a fully autonomous future. So let's bring our focus back to South Africa after all of that excitement. And we need to look at Sasol, a company facing a very different set of circumstances than Tesla. Sasol this morning published its business performance metrics for the 9 months that ended at the end of March. Well done, Sasol. You're right on top of your numbers. And they also provided some revised guidance for shareholders. Well, if Tesla's a story of exponential future growth, Sasol is a story of heavy industrial operation battling macroeconomic and environmental crosswinds in the here and now. But its share price is a rocket. It's doubled in 2026 this year and tripled if you look over the last 12 months. To understand Sasol right now, though, you have to take a look at the broader global chessboard. In today's report, management reminded shareholders that the ongoing conflict in the Middle East and the associated closure of the Strait of Hormuz, don't we all know about that, fundamentally reinforce the critical importance of domestic energy and chemical supply, i.e. what we at Sasol do. Gwedi Mantashe is out there trying to score political points by claiming South Africa's relationship with Iran, heaven help us, is keeping our fuel pumps full. Well, in fact, he should be praising the role of Sasol, as should all of those in government. It delivers a third of South Africa's petrol and diesel, and it's playing a vital role right now in keeping the South African economic engine running amidst some hectic global supply shocks. For instance, the Middle East conflict severely constrained the global supply of sour crude oil. There's different types of crude oil, but sour is a big one. A lesser management team than those that Simon Baloyi marshals at Sasol would have probably stumbled here, but Sasol successfully mitigated this by rapidly sourcing sour crude from other global regions, and the agility allowed the group's Natref refinery to actually increase production during the 3 months to end March. That's a rarity globally, supported by strong market demand linked to these exact energy security concerns. Operationally, the past 9 months have been a tale of two extremes for Sasol. On the one hand, you've got factors outside of management's control, like in Mozambique, where flooding wreaked havoc on the condensate logistics and transportation, how they get that around. The weather was so severe that it caused a drop in Sasol's gas production, and as a direct result, it's now had to tell shareholders that gas production will be down between 5 and 10% where it was last year. But when you look at what management can control, the picture is actually quite encouraging. Overall production at the Secunda operations was 8% higher than in 2025, the same quarter, same 9 months rather, to the end of March 2025. And that wasn't by accident. It was driven by better gasifier availability and, crucially, improved coal quality, because it has a destoning plant, something that has become very popular since the Guptas arrived in South Africa. Remember, they used to send all those stones and a little bit of coal on top to the Eskom plants as supposed coal to be put into those plants, and of course causing incredible damage, but it lined their pockets, didn't it? From a corporate finance perspective, Sasol has made a highly strategic move. Just last month, which we reported on, it successfully issued a $750 million 7-year bond at a coupon rate, interest rate that is, of 8.75%. It could have got 3 times as much. That is how much it was oversubscribed, and it's used that money to buy back more expensive debt. They're on it. They're nimble for a huge company like this. And we are delighted that Simon Baloyi will be at the BizNews conference in the Drakensberg, which we've just taken the wraps off. He's one of our keynote speakers on August the 11th to the 13th. Now, you can go onto the BizNews homepage and you'll see across the top there's an image, which you just click on that and it'll take you through to where you can book. Simon will be there, so will more than a dozen other top speakers. But I'm really looking forward to his presentation and the conversation that we have afterwards. Well, lastly, for this episode, back to another of the US Ricardo portfolio stocks, the one I spoke about at such length earlier, Teledyne Technologies. And if you want to understand what a high-quality stealth compounder looks like, look no further than their first quarter earnings for this year, which have just been released, came out last night. For those who aren't familiar, Teledyne operates in the shadows of the biggest industries on Earth. It provides enabling technologies, the sensors, the imaging equipment, the highly specialized aerospace electronics that other companies simply cannot build themselves. So they have to rely on Teledyne. It's a little bit like an industrial version of the chip maker ASML, or indeed its biggest client, NVIDIA. Teledyne's first quarter was nothing short of spectacular. It reported net sales up 7.5% compared with the first quarter of last year. that top line growth is great, but what investors really love is that the diluted earnings for the company came in 17% higher than the same quarter last year. That's exponential growth. And the operating margin, so you've got sales going up and the operating margin expanded from 22% to 22.6%. That's a juicy operating margin. These aren't just good numbers, they're exceptional numbers that speak to serious operational leverage and pricing power. And in fact, the quarter was so strong that management, who were highly conservative, have now confidently raised their full year guidance. That's what they say to investors. We are going to make the profit we're going to make for the full 2026 year. Not bad, eh? Only one quarter in. Executive Chairman Robert Merabian noted in the earnings release that organic growth this quarter was the strongest in the digital imaging segment. Their sales were up 8%. And he said there's immense demand for infrared detectors and systems across space, airborne, marine, and land applications, as well as for their complete unmanned aerial systems. Think geopolitical climate right now. There's demand for high-end surveillance, for drones and imaging, and it's pretty much insatiable. Governments are just going mad for this stuff as they now start to rebuild their defense structures. And Teledyne is supplying the picks and shovels for this gold rush. What I love about it, Teledyne, is the absolute discipline with capital allocation. It's all about capital allocation. That is what makes the difference between a great chief executive and somebody who, well, is just living on the fat built up by his predecessors. Teledyne's also an acquisition machine, but it does it smartly. In the first quarter of this year, they acquired a company called DD Scientific, a UK-based developer of high-performance gas sensors, and that added to the instrumentation segment. Those bolt-on acquisitions are something that Teledyne has done throughout its existence. I just love this business. It's one that buys complementary technologies, integrates them ruthlessly, expands profit margins, pays down debt. It's the very definition of a blue chip holding, and we've got it in our portfolios. So we arrive at the all-important so what? What do these three very different corporate updates mean for you, the BizNews tribe member, the investor, the guy who's following the Ricardo portfolio? Well, it really comes down to the beauty and necessity of a well-constructed, rationally diversified portfolio. In Tesla, you have your exponential growth engine. If, like those who follow our US Ricardo portfolio, you're holding Tesla, you're not betting on quarterly fluctuations of automobile production or gross margins. You're betting on Elon Musk's overarching vision of a society run on artificial intelligence, humanoid robotics, and autonomous transport, in other words, driverless cars. The fact that unsupervised robotaxis are now actively operating and collecting fares in Texas and doubling quarter on quarter means this future is no longer a distant promise. It's commercial reality unfolding for us in real time. In Sasol, we have a cyclical, foundational business. Yes, it's heavily at the mercy of global oil prices, geopolitical supply shocks, and even severe weather events in emerging markets. But management is doing exactly what they should be doing. They're optimizing the variables they can control. They're improving coal quality into the Secunda plant, dialing back on capital expenditure because they need to get debt down to be able to restart dividend payments. And they're very smartly restructuring their debt maturity to protect the balance sheet. It's a defensive, rational play in a highly volatile world. And then balancing that out, you have Teledyne. This is your stealth compounder. As we saw from the record-breaking first quarter results that we discussed earlier, it operates in a highly specialized, high barrier to entry market. Well, I should say markets, because it's got lots of these products. You can't just wake up tomorrow and start building space-grade infrared sensors or deep-sea acoustic modems. Teledyne possesses deep intellectual property that global militaries and massive industrial players absolutely rely on. And they allocate capital brilliantly. The legacy of Henry Singleton, the greatest business mind, according to Warren Buffett, of the past however many centuries. They buy smart, they integrate ruthlessly, and they generate immense free cash flow. Together, these three companies perfectly highlight why we invest the way we do here at BizNews. We balance the flashy, ambitious disruptors alongside the quiet, reliable compounders, always keeping an eye on our local realities. Well, that's it for today's deep dive. If you want to read more about any of the earnings reports we discussed today, or if you want to check up on the performance of the BizNews Ricardo portfolios, head over to biznews.com. You'll see that there's an easy way to participate in those portfolios. Open an account at Easy Equities, and you can acquire the BizNews Ricardo US or ZA Rand portfolios with one click. They've got things there called baskets, and all the portfolios are there. So if you put your 100 Rand a month into the ZAR Ricardo portfolio, they will allocate the exact amount into the stocks that we hold there. It's the easy way of doing it, and it focuses on the greatest benefits of investing 1 Rand cost averaging, put in a certain amount every month, and 2, diversification. Until next time, keep a cool head, stay rational, and happy investing. I'm Alec Hogg. Goodbye.